Hello, ladies and gentlemen. Welcome to today's European Session Market Outlook with GDMFX Europe. My name is Martin Panev. I am the Chief Account Executive for the company and also trading analyst. Starting with the North American markets as usual. Yesterday, little movements in the North American markets. The Dow 15 points up. That was pretty much it. What was more important yesterday was the minutes report, which came out a little bit dovish. In summary, policymakers see inflation remaining stubbornly low for the foreseeable future. Many officials acknowledged that recent global economic and financial developments may have increased to the downside risks. The economic activity somewhat, the minutes from the FOMC said. Many expected those conditions to be met later this year, although several members were concerned about downside risks to the outlook for real activity and inflation. This is also included in the minutes. The more hawkish members were concerned that delaying hiking rates much longer would lead to an unwanted buildup of inflation pressures. They thought the announcement of a rate hike might provide a signal of confidence in the strength of the U.S. economy. Yesterday, in the U.S. neighbors, the Canadian housing starts report year-on-year came out 30.7 thousand, better than the expectations. Today, we're looking for unemployment data, imports and exports year-on-year and month-on-month, along with the Bank of Canada Business Outlook Survey. Tomorrow, Mr. Polosh is going to deliver a speech to the public. Moving to the European markets, yesterday the German DAX 60 points up, the French CAC 40 followed by 20. Disappointing numbers yesterday came out from Germany's trade balance, exports and imports in total. That pretty much was the cause of unstable trading, I should say, in the stock markets. The Swiss unemployment rate rising slightly to 3.4% from 3.3%. Many Tier 1 UK events yesterday, however, no major changes were anticipated and none were apparent in the end of the day. Today, we're going to see the trade balance reports, which are due just any moment now. More importantly, today, beginning of the afternoon European time, IMF meeting. This is a meeting of its member countries to discuss stabilizing international exchange rates and facilitating development. The event may have an impact on exchange rates and the balance of payments, so traders should pay close attention to this event as it might bring a new dimension to the markets. Moving to the Asian Pacific region, starting with Japanese Nikkei 225, which did about 100 points down yesterday, 250 points up today. Asian stocks rose, extending a global equity rally, and Malaysia's ringgit headed for its best week since 1998 as investors piled back into riskier assets amid speculation the Federal Reserve won't be rising interest rates until risk from outside the U.S. subside. On the Pacific front, yesterday we had a major report for the New Zealand electronic card retail sales. This was a month-on-month report, 0.9% up from 0.45 year-on-year, 6.1 up from 4.2%. For the Aussie home loan sales, 2.9% lower than the expected 5, but better than the previous 0.3%. Investment lending for homes, 0.4% lower than the previous 0.5. And the Aussie dollar is trading with a bullish tone and is making fresh highs on the recent developments. So far, there has not been a negative impact on the Aussie from China returning its risk mood countries to to recover, supporting the Aussie at levels that remains in the RBA's preferred bracket below 0.75 cents. The news from overnight came with the FOMC minutes that were not convincing one way or the other and leaves the greenback exposed to downside. Employment growth is expected to have slowed in September after enjoying several months of strong gains. The unemployment rate in September is tipped to rise to 6.3% from 6.2% in August. Moving to the commodities sector, starting with the S&P 500 index, which had a range of around 35-36 points yesterday, currently at 2020. The oil yesterday rose above $50 a barrel for a second day and headed for the biggest weekly gain since August, amid speculation an increase in demand will ease the global glut. Libya's crude export capacity increased as Zueltina, an oil port in the eastern region, resumed loadings after a 5-month halt due to protests. The WTI crude oil had $2.2 range yesterday, currently at $50.50 per barrel. Gold prices fell in Asia on Friday as investors booked profits on earlier gains after caution stone in September minutes of the Federal Reserve's policy review, which of course suggested a hold on rates for now. Yesterday, the EIA natural gas storage exchange, the natural gas storage in the week ending October 2 rose by 95 billion British thermal units compared to expectations for an increase of 98. Natural gas is trading at 2.46 at the moment. The range yesterday was 7 cents per British thermal unit. This was all from me for today. Thank you very much for your attention. I wish you a successful trading day. Cheers. Bye-bye.